Hello everyone, welcome back to my channel. Today we've got a great video for you all around small cap stocks. That's right, the other day Nvidia, another big name tech stock, sold off quite a lot, but the Russell 2000, which measures small cap stocks listed in the US, was up by 3.5%. And some people are saying this could be the beginning of a big rotation out of large cap tech into smaller companies. So stick around to the end of the video, learn everything about small caps, and decide whether they are right for your portfolio. Hi everyone, my name's Jeff. I've been working in the financial markets for around 20 years now, helping people understand the financial markets, stocks, forex, options, all the major asset classes. Gained a lot of knowledge over that time. I've seen a lot of clients' portfolios, buy and hold clients, active traders, and a lot of strategies that have worked or failed miserably. I've set up this YouTube channel to produce videos to help people like you understand the financial markets and ideally not make the mistakes that me and other people have made. So if that sounds like something you'd be interested in, why not subscribe to my channel, get a lot more great content, and up your financial knowledge and help you reach all your financial goals. By the way, this video or none of my videos is financial advice. It's really just for educational purposes only. These are not recommendations of investments. So if you need qualified advice, seek out a financial advisor. And remember, whenever you invest, your capital is at risk and there's always the chance you get back less than you invested. With that out of the way, let's get into the video on small caps. So small caps, well, what does it actually mean? Well, small, we know what that means, obviously, but caps is just short for capitalization. And it's really just the market capitalization of a company. So a simple example, if a company had, say, 100 million shares outstanding and trading on the stock market or owned by people, and the share price was $5, then you would say the capitalization, the market cap of that company would be $500 million. It's as simple as that. And small caps are smaller companies with a smaller market capitalization. In the US, they're generally accepted to be somewhere in the region of 250 million up to 2 billion. Anything above 2 billion, you start to get into mid cap, and then as you get up higher, you get into your large cap and even mega caps for the likes of Nvidia, Apple, and Microsoft, for example. So small caps are really just smaller companies. So how do you track small cap companies? Well, one of the most famous indices for this is the Russell 2000. This is the 200,000 companies that meet that criteria. They've been at around 200 million to 2 billion in market cap. So the Russell 2000 is your way to keep an eye on what's happening with small caps. So what are some of the benefits of investing in smaller companies? Well, really, it's all about growth when it comes to smaller companies. Remember, these are companies that are in the earlier stages of their growth cycle, and they're trying to get bigger and bigger and make their way up in the higher market cap and get into things like the S&P 500. So small caps is where you'll see a lot of growth. But you'll also see a lot of failures. They're smaller companies. They're not tried and tested over many, many, many years necessarily. So they can be a little bit riskier and a little bit more volatile. So what have the returns been like of small caps over large caps? Well, if you look at this chart, we can see going back to 1926, it's been around 11.8%, which is just about 1.5% more than large cap stocks. So the returns over that period have actually been slightly more. But if you look here in the last 5 years, it's been a big underperformance for small cap stocks versus the likes of the S&P 500. So we've seen a shift, and recently large cap has been far more popular and have had far better returns. One of the reasons that we've seen small cap stocks underperform, they're much more vulnerable to the business cycle. We obviously had the COVID pandemic in 2020 with a huge impact on the economy. Now companies like Apple, Microsoft, Nvidia, and those, they have huge amounts of cash balances. So for them, it wasn't such a big deal. But if you think about it, a smaller company, some may not be profitable at all or have much lower profits. Others may be more dependent on financing, so they're more exposed to interest rates. And we've seen interest rates move up an awful lot over the last couple of years. And others just maybe didn't have enough cash to weather through the storm. So small caps can be more vulnerable to the economic cycle, particularly when there's things like recession. This is part of the reason they've underperformed over the last 5 years versus the S&P 500 and larger cap companies. As I mentioned earlier, the other day, the Russell 2000 of small caps rallied 3.5%. And some people have started to think, I should say, that this is a rotation out of larger cap tech that has done so well into smaller caps. So are small caps right for you? Well, one thing you need to consider here more than anything else is your risk profile and your ability to tolerate risk. If small caps can be more volatile and sell off more in recessions and whatnot, are you able to handle that? That's the question you really need to answer. And then you also need to think about your time horizon. Investment should always be long-term. So if you're a long-term investor, you're young, you're maybe just starting out in your career, why not? You've got plenty of time to make up any downfalls, any losses, any recessions that we see. So perhaps small caps are something that you should be looking at. But you don't have to be young to get involved. You know, there's lots of ways that you can do it. And one thing that you can think about is maybe taking 10 or 20% of your equity allocation and allocating that to small caps in case we are at the beginning of a big rotation here from large cap into small cap. They have been falling behind and there's a lot of ground to make up. But maybe that means it's just time to start investing in small caps. One thing else you need to consider, I think, when it comes to thinking about investing in small caps, a lot of the reason the markets have moved up for the large indices is the big mega cap tech stocks, Amazon, Microsoft, Apple, all the big names. And of course, they've been doing, quite well over the last year or so based on the AI story. And when you look at the Russell 2000, there's a lot less exposure into technology and AI. So if you think tech and AI have got a long way to go over the next 5, 10, 20 years, then maybe you don't want to put so much money into small caps because you won't be getting that tech exposure. But if on the other hand you think, no, well, this is all overvalued in the tech space, it's been a great run, but now things are going to change a little bit. Economy's coming back strong, things are going well, interest rates are probably headed down. So how would you go about adding small caps to your portfolio? You can pick your own individual stocks. Now that's going to take an awful lot of work and research and time. But if you're happy to do that, then go for it. One of the advantages of small caps is there tends to be less analyst coverage. So what does that mean? You can find some more hidden gems. If you're willing to put the work in, you can find some smaller companies that isn't covered as much, and you can discover it and get a lot of price action on the back of it. That's one of the benefits of small caps. But if you're not willing to put in the work and you just don't have the time to be researching individual companies and going through all of that, as I've mentioned many times on this channel, ETFs are a great way to do it. So you can look at ETFs like IWM, for example, in the US. That tracks the Russell 2000. Have a look at the fact sheet, all the information documents, and make sure it's right for you, but that's a great place to start. If you're in the UK, you could look at something like XRSU or XRSG for GBP. Those are Russell 2000 or small cap ETFs that are traded in London. Again, read all the documents, make sure you're comfortable with that if you wish to go ahead and invest. The benefit of ETFs, or even if you want to do this as a mutual fund, there's plenty out there, but that will help you to diversify your risk. And that's something you should probably be thinking about if you're going to invest in smaller companies. So that's it. Small caps, really something to be thinking about here. These are smaller companies that could provide you some great returns, but they are going to come with more risk. So make sure you diversify. If you want to add some to your portfolio, why not start off with a small amount, 5 to 10% of your equity allocation into a small cap ETF and see how it goes as you learn. It's the best way to do it. Dollar cost average in, as usual, is the best way to get invested, and I hope it works out for you. If you liked the video, why not click on subscribe, give me a like, share this video with someone that you think could benefit from the information as well, and I look forward to seeing you in the next one.